people are moving toward global economy, a global currency, which is stablecoin and crypto. Whether it's Mesh or somebody else, whomever that can basically build integration with all these exchanges and wallets in one hand, and as Cuy mentioned, all the PSPs and large merchants on the other hand, can build an emerging network, a payment network that can help to move money faster, better, cheaper. I have a great story to share, and I'm sharing it publicly for the first time. So,
welcome to Tokenized, the show focused on stablecoins and the institutional adoption of real-world assets. My name is Simon Taylor. I am your host for today. I'm the author at FinTech Brain Food and head of strategy over at Sardine. And joining me, as always, it's my friend, my co-host, my compadre, Cuy Sheffield. How you doing, my friend?
I am fantastic. It's been 2 weeks since we've done a news show. It feels like 2 or 3 months. There's just way too much to cover. Let's get into it.
All right, let's do it. What's excited me this week is the fact that Tokenized now has a newsletter. So if you don't like audio and you want the written thing, go to tokenizedpod.com/newsletter and you'll find it there. So go ahead and hit that subscribe button. It would mean the world to us if you did. Joining Cuy and me today is Bam Azizi, who is CEO and co-founder over at Mesh. How are you doing, Bam?
Good. Thank you for having me. And today is actually Persian New Year. So Happy New Year to all the Persian fellas.
Yes, I love that fact. Thank you for sharing. Alrighty. We do need to get into the show. But before we do, we're happy to remind you that this podcast is, of course, sponsored by our friends at BVNK. This podcast is sponsored by our friends at BVNK. And if you've been listening to this podcast, you've probably heard us say every business needs a stablecoin strategy. And if you're looking for the best place to start, that's BVNK. BVNK is the leading provider of stablecoin payments infrastructure, helping businesses move money faster, settle globally, and even launch their own stablecoin products. All with licensing and compliance so you can build with confidence. We're proud to partner with BVNK on Tokenized. To learn more, visit bvnk.com. And just one last bit before I get into the content, I need to remind you that some of the views and opinions of our contributors today are their own and not necessarily the companies they represent. Please don't take anything we say as tax, legal, or financial investment advice. Do your own research and be safe out there, guys, please. All right, let's get on with this, shall we? First story from, everywhere on the internet was a crypto firm called Mesh. I wonder if I've ever heard of those. Raised $82 million as stablecoin adoption soared. So, Bam, I'll come to you in a second, but let me just read out the cheat sheet version here. Mesh is a crypto payments infrastructure provider, and the round was led by Paradigm with participation from Consensus and Quantum Light, and my possible favorite name for a fund ever, YOLO Investments. Most of the investment was settled in PYUSD, or PayPal's stablecoin. And Mesh has apparently seen your transaction volumes grow by 300% quarter over quarter as stablecoin adoption accelerates, and plans to use the funding to expand its payment rails. So there's a lot we can talk about here, Bam, but first of all, congratulations. And second of all, tell everybody what Mesh is, what you do, how you're different to some of the others, and we can get into this funding.
Sure. Thanks for having me on the show. Would love to tell you more about Mesh and the fundraise, and we can discuss all sort of topics as well. In terms of what Mesh is, like, we're building the new network for money movement. So we are basically built this for stablecoin and for the payment. I wish we were genius enough that day one, that was the mission. We went through a bunch of pivots and we turned direction a couple of times. But as a stablecoin, as you mentioned, soared and the usage went up, and we felt like a stablecoin is the killer app for crypto. Because it has all the upside of crypto and none of the downsides. It's not volatile. It's pegged to US dollar or stable currency, hence the name stablecoin. And we believe payment is the killer app for stablecoin. And the problem for the payment in a payment adoption or crypto payment adoption is user experience, and Mesh is there to solve that. So you can just simply, the same way you're using Cuy's Visa credit card to pay for a coffee, you can use your Coinbase account and tap and pay for something online or in a physical store. And you don't have to wait. You don't have to copy and paste wallet address. We call ourselves like first mile or last mile delivery system that enables users to pay with what they have, where they want, when they want.
I want to be able to use Cuy's Visa card for everything, by the way. That would be really, really cool. Cuy, sorry, you were going to jump in.
Yeah. So first off, huge congrats. When we first met, maybe a few years ago, the initial use case for Mesh, as I understood it, was really on ramps into self custodial wallets. And so it was this scenario where you had consumers that had Coinbase accounts, other centralized exchange accounts, and then they wanted to move funds, load funds into MetaMask or Phantom. And so you had the ability to log in with your Coinbase account inside of a Phantom or MetaMask and be able to easily one-click, move money, from Coinbase, into MetaMask. And that could either be funding it from your card that's on Coinbase, where you're purchasing and transferring at the same time, or a balance that's on Coinbase. And so can you talk a little bit more about the evolution of the business of this on-ramp role that you've played for some time, and then now transitioning from just a focus on on-ramps towards pay-ins or enabling merchant acceptance where consumers are using a Coinbase account to pay at a merchant instead of just using a Coinbase account to load their MetaMask or their Phantom?
Yeah, I have a great story to share, and I'm sharing it publicly for the first time. So this is exactly right, Cuy. That was the main use case. But we had one customer in LATAM that basically, it was a small company, and they were like top 5 volume provider for our services. And then as a CEO, I was curious to see like we put this in the universe, and then we asked founders to just go build on top of Mesh. I was curious early on to see what are the use cases people building on top of Mesh. So I went to the website. I couldn't understand a word of it. I used Google Translate. And apparently it was an educational website that you could buy a training course with crypto, because crypto, the stablecoin payment, is a thing, or was a thing even like 3 years ago, 4 years ago in Colombia and some other countries in LATAM. So when you wanted to pay, instead of like copying and pasting wallet address, they put Mesh logo there that you could click and then pay with Mesh. And I felt like, wow, this is a good idea. We have to build this. Like, this really makes sense. If we believe that the future of finance is crypto and people are going to hold their assets in crypto and a stablecoin, we have 600 million crypto owners as of today. And it's more than the number of users that PayPal has. So if you're offering PayPal at your checkout, you have to offer crypto payments, and we can enable that. So we started building, after Mesh Deposit and Mesh Ramp, we started building Mesh Pay. And the volume we're getting on the pay side is growing faster than anything else we have done in the last 5 years or so. So I wish I would take the credit for like, we were genius enough to see that and do that, but it was just a customer idea that we kind of doubled down on it.
Sometimes you just got to smell what the customers are doing, though, right?
Yeah.
Like, smell what sells and kind of do more of it. I love that sort of reactivity. So is that your primary like line of business now, or like if you were to split your revenue by how you make money, is that the vast majority, or how does it split by use case?
So Mesh Pay is nothing else than Mesh Deposit and Mesh Ramp. As Cuy mentioned, the same way you connect your Coinbase and fund your wallet or a third-party wallet like MetaMask, you can also connect your Coinbase or MetaMask wallet and pay with those assets. So it's a combination of deposit and ramp, plus some other features that we have built for the payment use case. We call it smart funding. So like, for instance, if you have Bitcoin or Dogecoin or other type of like meme coins, and you want to pay with a stable coin because the merchant accepts a stable coin, someone needs to do that trading and conversion and bridging. Like, you think like this is a corner case, but that's not the case. Like 95% plus of transactions on the payment side requires users to do 2 or more number of transactions manually. And the reason is very simple. The market cap of crypto is around 5 trillion or 4.5. stablecoin is 200 billion. So people still hold their assets in other crypto. And pay with Bitcoin is so 2019. Nobody does that anymore. Merchants want stablecoin. They don't want Bitcoin or Ethereum. They accept it here and there, but the general theme and trend is merchants will accept stablecoin or some other type of non-stable but tokenized currency. On the other side, the users own different type of assets. So, and then we make it kind of possible to convert and pay. So users get what they want, merchants also get on the other side what they want. So in terms of like our focus for the next 3 to 5 years would be only payment. We will, of course, continue building on deposit and ramp, but because of the payment use case, not because we're going after like that, like I call it red ocean market, that like there are 30 more ramp providers. I don't think anyone wants a new ramp provider. But on the payment side, there's I call it blue ocean. So that's kind of where we are. And where we're going.
And how do you think about, do you see Mesh as direct to merchant or to PSPs that are then looking to offer stablecoin acceptance, to their merchants? And then if you put yourself in the shoes of whether it's a merchant or a PSP, and you want to be able to accept and offer that, like, how do you think about the challenges of, okay, well, you mentioned 600 million consumers who have crypto, but those are spread across maybe 50 different centralized exchanges, maybe another 50 self-custodial wallets. And so like, you could go, exchange by exchange, wallet by wallet, integrate those connections. Like, what are some of the challenges around enabling acceptance as a PSP, or a merchant, and how does Mesh, fit in with that?
Yeah, we don't want to reinvent the wheel. So we want to work with PayPal of the world, Stripe of the world. And maybe if you're a large merchant or you have set of merchants like Shopify, we want to work with you directly, if it makes sense for those companies. But we don't want to be the next Stripe. We want to work with those companies, and we are just basically being the network and the connection layer. It took us, as a startup, it took us 5 years to build this. We have 300 plus integrations with exchanges and wallets, and it took us 15 years to learn how to build it. My previous startup was no password. We had 2,000 integrations there. So we have still in the team, we have people that work with me at no password. And we have the expertise in house to build integration fast, maintain it. There are a lot of work. Integrations are also not made equal. So you need to offer different type of tokens, different type of integrations. You need to build a unified experience, no matter what exchange the user is using. Like everything should be exactly the same, whether it's a DeFi or self-hosted wallet or exchange. And then there are a lot of local exchanges. Used to be just Binance and Coinbase. Now we have like Lemon Cash in Argentina. You have CoinMina in MENA area. We have Yellow Card. We have CoinDCX in India. We have Paribu in Turkey. So you need to work with those local exchanges as well. Sometimes they're partners. They want to work with us, but they don't have the bandwidth to build like an OAuth type integration. So we have to go and build it for them to be compatible with our network. So it's a lot of work, and I'm glad that we have done it when people were making fun of us when we were doing it 2 years ago, 3 years ago. And now like it's time to kind of basically utilize that and enable other PSPs to just use one API and cover the entire world versus just going and building integration one by one. Also, from exchange perspective, it makes sense to work with us versus just working with 20 PSPs. Like you just use Mesh and then you get all these PSPs leveraging your exchange.
Yeah, it's fascinating that I think you kind of get lumped in with a lot of the infrastructure companies out there, but you're reasonably different in that this feels like a two-sided network that you're intentionally building. In Visa language, it would be sort of merchants and the kind of the merchants and acquiring banks, and then the issuers and the issuing banks, and kind of everything that sits on that side. With your model, it's kind of exchanges and wallets, but it's still a two-sided market. Where would you say your focus is? Is the Mesh button the future, or do you sort of fade into the background and become a pure integration player? How important do you think brand is in that as well?
Brand is very important, but I think we need to be realistic. So if you want to work with all these top 10 like PSPs, you want to work with Visa and other like payment companies, you have to offer some sort of a white labeling or gray labeling for them to be able to basically utilize your product. For us, what matters is like we want to kind of be Switzerland in this space and working with all these parties involved, not going head to head. It's a little bit hard, especially in this competitive market, but we have been successful so far and want to continue doing that. And if you want to, there is a fine line in terms of like how much branding matters here, how much volume and usage matters. For us, the game is adoption and usage and volume, not just brand itself. Maybe at some point we can start thinking about branding, but that's not the key metrics for us now.
I also wonder about the incentive mechanism when you're building two-sided markets as well. Visa has a fairly famous one called interchange that I hear does pretty well, but I'll leave that to some other people. Cuy, what are your thoughts on this acquisition and the space more broadly?
Yeah. So to clarify that on the investment side, like it's super exciting that there are more pieces of infrastructure that are coming together that are, helping to solve some of the challenges and complexity around, using stablecoins, for payments. And I think it's very difficult for every PSP to go and integrate with every exchange and every wallet. It's been interesting to see like Wallet Connect and the ability to, just connect to self-custodial wallets. Some PSPs have started with that, but then it's a very different experience. And then you're leaving out, well, there are a lot of consumers who don't have self-custodial wallets, who have, custodial wallets. I think the other big missing piece to me that I've been fascinated by that I haven't really seen a lot of discussion around is the ability to use stablecoins for recurring payments and subscriptions. And so as it stands today, I have not yet seen in the wild any successful implementation that has scaled of using stablecoins to pay a monthly subscription. If you wanted to pay Netflix or Spotify, or like there's so much of e-commerce that is subscription based. A lot of our network and products we've very much tailored towards enabling kind of easy subscription flows. How do you think about solving that problem with stablecoins, which is traditionally this kind of push payment flow that I don't think Netflix wants to have to send me a request every month that I got to open up my wallet and click yes, like let me pay Netflix for this month. And so, do you see that as a still a challenge in the space? And is there a role that Mesh is playing? What does it look like to unlock subscription recurring payments in a stablecoin context?
100%. I think that's the future. The huge amount of volume of payments that happening on the fiat side is subscription-based model, and credit cards and debit cards and bank connections, ACH, like they all solve that problem. And if a stablecoin wants to do something here, we need to, as a whole, as an industry, solve that and address that challenge. The way I think about it is we can do that through smart contracts. But the problem is exchanges, they don't support a smart contract. So again, back to my original uh, talking point about Mesh is we want to unify the experience across exchanges and wallets. So we'll take care of all the complexity, no matter where the asset is coming from. As a self-hosted wallet or exchange, you get the same experience as a consumer and also as a merchant or PSP on the other side of it. And if there is anyone that can do that because of our integrations, it's Mesh that can potentially build that uh, for the rest of the world, so they can just simply use that. But from the technical standpoint, it would be leveraging our API integrations plus some smart contracts, some creative ways to do things to make this possible. Another thing that is happening at the same time in the market that is related to this piece of technology, or I mean, like smart contracts, is borrowing and lending, right? So the same way you're using smart contracts, so instead of you selling your Bitcoin, you just borrow against that, but your Bitcoin will be, or your Ethereum in this case, would be basically in as a collateral in a smart contract for you to borrow some money and pay for things. So there are some creative way to do that, but the core of it is going to be based on the smart contracts, and I think Mesh can be the leader on that end.
It's going to be fascinating to watch. I was thinking immediately about Stripe billing as you were talking, like such a big part of it. And I think that's a lot of that's built on the Visa Direct capability. And so really, really interested to watch you guys evolve. I was also thinking about how open banking and sort of ACH and PIX, and like we've got an integration problem with all of the multiple rails that we already have kind of out there in the wild. So applying what you do to the rest of the world, and with something like a Visa Flex credential, for instance, and having an authentication mechanism over the top of it would be super, super fun. So I think you're in a great spot. So what's next up for you? Never mind Simon's pontificating. Like, where are you heading from here?
I think we believe that at some point we will have more crypto owners than bank account holders and credit card holders. So people are moving toward a global economy, a global currency, which is stablecoin and crypto. And whether it's Mesh or somebody else, whomever that can basically build integration with all these exchanges and wallets in one hand, and as Kai mentioned, all the PSPs and large merchants on the other hand, can build an emerging network, a payment network that can help to move money faster, better, cheaper. And I think that's the future for Mesh. And that's what we want to build at Mesh. There are a lot that we need to do on the payment side and the borrowing and lending and the smart contract, recurring payments. And good news is we have the funding to do that. And we have the money to do that. And also we want to at the same time want to expand globally. So if you're a PSP in Turkey, if you're a PSP in LATAM, if you're a PSP in, I don't know, North Africa or in Southeast Asia, we'll work with you, we'll come to you and make sure that you will get connected to the grid so we can basically add value on both sides of the chain, as you mentioned.
Get connectivity already. Well, you mentioned something that made me think of our next story, actually. So I'm going to read this out. But what you said was sort of less focus on on-ramps. And I think that sort of on-ramping idea seems almost passé now. But speaking of which, MoonPay, famous on-ramp provider of the last cycle, has acquired an API stablecoin infrastructure platform called Iron. And apparently this is worth an estimated $100 million in an all-stock deal. Iron, of course, offers APIs that allow businesses to easily integrate stablecoin payments into their platform, more of a, I guess, bridge lookalike than anything. And their technology will be integrated into MoonPay's suite of services, enhancing their stablecoin infrastructure offering. So there's a lot going on here. We are well and truly in M&A season. I saw Kraken just acquired somebody for 1.5 billion today. M&A season is among us. But Kai, your thoughts on, is the on-ramp disappearing? Are they becoming invisible? Is everybody becoming a stablecoin company now?
Congrats to Iron and MoonPay. Stablecoin orchestration is hot right now. It's very clear there's a lot of interest in the potential for stablecoins to be used in many different payment flows, in particular, I think cross-border, B2B, B2C, P2P. So we're seeing many new orchestration companies that are popping up. We're seeing many large payment companies looking at the space, and I think a lot of companies are going through a build, buy, partner type of evaluation. And if you're a payment company and you say stablecoins are important, like what are the different paths for you to offer a product? I think what will be really interesting to see as more and more of these companies pop up is how do they differentiate between each other, and how do they ultimately get distribution? As I think the market is going to be more and more competitive, and most large merchants, most payment companies, if you ask them, like, how many pitches have you gotten of stablecoin orchestration providers coming to you saying, "Hey, we're going to be, the infrastructure that you use for stablecoin payments." It's a just managing all those inbounds and trying to sort through, what's the difference between this provider and that provider. It's very difficult and a full time job. And so, I think on one end, there's an argument that companies who have existing distribution, who already have relationships with money transmitters, who have relationships with merchants or with banks, are going to be looking at how they can embed stablecoin offerings into those existing products. And then I think you'll see many of the orchestration providers try and figure out what is that unique area that they could differentiate. Is it a market or region basis? And so we see some stablecoin orchestration companies going really deep, just in Latin America, and saying, like, let's build kind of unique partnerships in markets that aren't well covered by local exchanges, or let's focus on large value B2B, where some of the liquidity breaks down if you're trying to move a $10 million payment. And so I think we're at the stage where general purpose stablecoin orchestration that is kind of built for everyone, for every use case, for every market is going to be a very hard area to compete in, and it'll be much more targeted either by region or by use case. And then it's a question of will you have bottoms up new really fintechs. I don't even consider these crypto companies. They're fintechs. They're not doing anything with crypto assets. Will they be able to break through, or will existing companies with distribution be able to build, partner or acquire and be able to get into that market? So I think it is a fascinating and very competitive ecosystem that's playing out right now.
Yeah, orchestration is hot, as Kai said. Bam, what are your thoughts?
I echo Kai on that. I strongly believe that if you can build something that is general purpose and is successful and it's global, and you can do on ramp and off ramp and exchange ramp across the globe, if you can build that, or at least you can stitch some of these together and build that, a lot of companies would use that product. I think the way that these orchestration layers can compete is they can different type of ramps, whether it's on ramp or off ramp, to expand their access to the bank account. So there is a use case that both me and Kai love, is the sandwich use case, that the fiat comes in, gets converted to stablecoin, moves across the chain, and then gets converted to like currency in other countries. So you really need to have the entire map covered, both from banking integrations, exchange integrations, and also licensing in different regions to make that happen. So I'm just watching that game, eating my popcorn to see like who is going to win that game.
Yeah, no, fascinating to watch because getting bank partnerships in multiple countries is extremely hard. Getting licenses in multiple countries is extremely hard. Managing liquidity in fiat pairs and stable pairs and maintaining those banking relationships and managing custody and doing all of that, all extremely hard things to do in their own right. Now put all of that together and put an API over the top of it. Like this is probably one of the hardest things to do well, which is why BVNK and Bridge and others I think are doing quite well from it, because trying to do that alone is hard. Kai, you
Yeah,
got
yeah. One other topic that I think is interesting, and Bam, I'd love your view on is like how do you think about the current market structure with the specific stablecoins that are being used in these flows? And I think you've got a unique perspective on PYUSD and the potential that you see for PYUSD, particularly in consumer to merchant payments. But it feels like both on the consumer to merchant side and on the orchestration side, there's kind of a question of one, will there be an end customer preference and choice where someone will say, I want to do a cross-border payment. I want to explicitly use USDC or PYUSD in it. Or if it's a stablecoin sandwich, does that get entirely abstracted away where the end customer doesn't even know what stablecoin brand is being used behind the scenes? They just care about the end result that lands in fiat that's faster and cheaper. So I guess what's your take on, with everything happening in the competition on the orchestration side, with the work that you're doing on the consumer to merchant, pay-in side, like how do you see the stablecoin battles, from the large stablecoin issuers and the different advantages or ways that might play out between PYUSD, USDT, USDC, and some of the other Paxos products?
Love this question. This is a great question. I think the amount of fragmentation we are seeing on the orchestration layer, just multiply by 100, we'll have it on the stable side. Like every bank will issue their own stable coin, every corporation will issue their own stable coin. Like I'm sure like Facebook will come back to the mix and start that project again. So and also countries and nations, and then you're hearing like states in the US, they want to issue their own stablecoin. So, and I think from consumer perspective, it would be totally abstracted. They don't care. Like if it's cheaper, better, faster, I get better incentive, better service, like just use that, right? There could be some preference from not a stable issuer, but a stable type. Means like if you're in let's say in Turkey, sometimes you want to get like lira back to stablecoin versus US dollar back to stablecoin. So you might have, as a consumer, those type of preference, or merchant might have those type of preference. But overall, it would be abstracted from like your view that who is doing that behind the scene or what company doing it behind the scene. I put my bet on payment companies like PayPal or Stripe, to be able to win that, because they already have the distribution. PayPal has 400 million users globally, so they can basically dictate and become the payment currency of the world. Another one that is emerging that I really, really love is Ripple USD. So Ripple was a successful company. They're a payment company. They've done a lot of B2B, but now they started basically Ripple USD. So watch that one closely. It's going to grow fast.
Yeah, just very like pragmatic. Specifically at the checkout, do you think consumers are going to choose a stablecoin brand? Like in your use case for pay-ins and the check, like you're you're about to pay, and then it says you want to pay in crypto. Are you going to say PYUSD, USDC, RLUSD, or is it just going to be you owe $100 and then you pay with whatever in your wallet, and then the merchant or the PSP on the back end says how they want to receive it, and that's abstracted away?
It all happens at the back end, for sure. Yeah,
It
it's
does
not.
think about
Yeah.
the
Not only that,
context
and
of-
all on the exchange side. If like right now, open your Coinbase account or Binance account, there are multiple stable coins. I think they're all going to be consolidated as US dollar or US dollar balance.
Yeah, it has to happen, doesn't it? I
Yeah.
wonder how that happens. But because but it has to happen. I mean, maybe that's an initiative for somebody to go do, because some of the issuers at the moment are making so much money out of just holding treasuries that it's very difficult for them to give up their brand and their market space, and there's typically a power law. But as you say, as financial institutions and the Genius Bill move into it, then it becomes a fundamentally different thing, and PayPal has lots of users so as well. And of course, the two coins you mentioned, coincidentally, PYUSD and the Ripple USD, are both NYDFS licensed and depository based, is my understanding, which are considered like the lowest risk, highest quality type of kind of stable coin there is. And Mike Hudak at Sling Money told me the same thing. Part of the attraction for him was thinking purely from a risk appetite standpoint. That direction of travel is something where if you want to get comfortable with something, that's the thing that you can get most comfortable with. So I think you've really got a great point on all of that. Well, I'm just going to take a quick break right here before we hear from our sponsors, before part number 2. This episode, if it isn't already obvious, is sponsored by our friends at Visa, the leader in digital payments. Visa's Tokenized Asset Platform, or VTAP, uses smart contracts and cryptography to help banks bring fiat currencies on-chain, whether it's launching a stablecoin or deposit tokens or something else. VTAP allows financial institutions to issue fiat-backed tokens, improving financial efficiency and enabling programmable finance. Check out the links in this episode's description to express your interest in VTAP. This episode is brought to you by Canton Network. Ever wonder where real tokenized asset volume is going? Canton Network. The groundbreaking Layer 1 public chain where traditional finance and crypto are starting to converge. Why? Because Canton is the only public network with privacy. No workarounds, no compromises. This is 24/7 markets, on-demand financing with real yield, where value moves as freely as information on the internet. This isn't just another blockchain. No, this is where the serious money is flowing to solve real market demand and risk. Visit canton.network to learn more. Thank you to our sponsors. We mentioned the Genius Bill right before the break, and now speaking of bills and regulators, the OCC has come out and clarified that apparently banks do no longer need to ask permission for certain crypto activities. So the Office of the Comptroller of the Currency, the OCC, has clarified that nationally chartered banks don't need to seek permission before engaging in custody services, holding stablecoin reserves, and using distributed ledger technology for certain banking functions. The OCC emphasized that banks will still need to ensure they conduct these activities safely and soundly, i.e., we don't want another SVB-like situation, with adequate risk management taking place. But more regulatory clarity is coming. Bam, what are your thoughts on this move from the OCC and kind of the broader moves coming out of the SEC and others?
Yeah, you should think holistically about what happened in OCC and also what's happening in Congress and also SEC. Is like also Congress kind of did the Genius Stablecoin Act, right? So that is purely for stablecoins and payment use case. I think that enables banks to move toward a more stable way and more efficient ways to move money across banks. And also now you're hearing like a company like Bank of America is talking about crypto payments, right? So stablecoin payments, that could be potentially a use case banks can now roll out to all of their customers. Overall, that means like we are as Mesh, we are like building rails. The moment regulation becomes available, they're acting as a guardrail. We implement them, and then it makes it more safe and appealing for larger financial institutions and risk-averse players to come into that market. And we're just purely the connection layer. The more fragmentation, the more value a company like Mesh can add because we're just that network connecting all of these nodes. And we can unlock new type of use cases like stablecoin deposits, stablecoin payments, and things in that nature.
Yeah, I think this OCC guidance, specifically is a pretty big deal, and it didn't really get that much attention in crypto circles, and these are the things that like the banking and payment nerds and we get excited about. We're like, oh, did you see this? Like this is it.
Yep.
It's if you go all the way back, it's been interesting to see how the OCC, and their perspective and communication with banks around stablecoins and crypto has evolved. Yeah, I forget which year, but when Brian Brooks, was I think for a limited period of time, he was the comptroller. Yeah, he put out guidance specifically saying that banks can hold the reserves around stablecoins, that banks can interact with public blockchains, and so he had a perspective that was telling banks that there is a path to be able to do this in a safe and sound way. Then I think what we saw, over the past few years was, you know, OCC guidance was updated, with this requirement, to seek a non-objection. And I think that that's a pretty big deal and challenge for many banks. And as we've talked to banks, over the years, there were banks that have wanted to interact with crypto, have wanted to explore initiatives with stablecoins, but once it was very clear that if you wanted to move forward with that, you would need to go and seek a non-objection. That was a pretty strong signal and statement that if you're just a product team and you're inside of a bank and you're underwriting the risk and ROI of different opportunities, if you could focus on one product that fits within the current regulatory framework that has clarity that you can move forward on and there's a path to launch, and another product that you would do a bunch of work around, what's the strategy, what do you want to do, what's the plan, and then there'd be this extra step that you'd have to go and seek non-objection. And then when you seek non-objection, very clear, would you get that non-objection? And I'm actually not aware of many banks that took that step to go and seek non-objection, and I'm not aware of many banks that got non-objection. And so I think what it ultimately did was just putting that requirement in place was a pretty big barrier for banks to even try and move forward. You'd have to be extremely motivated, to move forward and say we're going to do this. And so, as the general market and interest and demand and growth of stablecoins in the space has come back, as we talk to banks, across the U.S., that's been one of the things that they've pointed to. They've said we've got this OCC guidance that requires a non-objection, and so yes, we're interested in the space. We'd like to do things in the space, but this is really hard for us to really do anything if we have to go and get a non-objection. And so now having this updated guidance that doesn't require a non-objection, it enables a path for banks to put together a plan, work on a POC, start looking at what partnerships, infrastructure providers that they can have, and have confidence that it's not to say that banks don't have to manage the risk and worry about the risk. We're like that's a big part of what banking is how do you manage and mitigate risk. It's just there's not a separate process for building a product that requires just a certain technology versus a product that requires another technology. It just has to fit within the overall framework. And so I think we've seen feedback from a number of banks that they're excited. This isn't the only thing. Now there's FDIC, there's Fed, and there's the Genius Act. So it's not like it's a silver bullet that there's one thing that happens and then every bank comes rushing in. I think there's this culmination of as guidance gets updated across the banking regulatory agencies and as bills move forward, that gives more and more confidence to banks that there is a path for them to participate, which then will ultimately lead towards products that they start to roll out in the space.
Yeah, it's funny. I was at FinTech Meetup last week, which is if the bankers gather for the embedded finance banking node conference to sort of do partnerships in fintech and payments. It's one place where you see it a lot. That and Money 2020. It's like always the Venetian, always in Vegas. But I had in one single dinner 3 executives from 3 different banks kind of run their existing stablecoin strategy by me and ask for feedback. It wasn't that they were thinking about doing it. It's like, here's what I'm thinking. Would you change it? Does this sound right to you? And a lot of it comes from, as you say, the SEC is not only no longer suing people, they've dropped their case against Ripple. They're starting to run roundtables on what is and is not a security. You've got kind of that clarity. You've got the Genius bill. Now you've got this OCC piece. It's really, really adding up. And I want to read out some of the Genius bill's key points, because I think once you understand this, you understand why banks are interested, right? Because the Act claims to establish a framework that's going to define stablecoins as a digital asset used for payments and settlement. They must be issued by a licensed entity and cannot be algorithmic. Hello, Terra Luna. Sorry, you don't get to exist again. There's going to be dual regulation by federal and state, with bank supervisors also having a role. And stablecoin issuers become PSIs, or payment stablecoin issuers. And it follows the Durbin Amendment to the Dodd-Frank Act, which essentially says for any issuer with less than 10 billion in assets, then you're subject to state oversight. And if you're above 10 billion, then it's federal and it's state. You can be a bank, you can be a trust company, or a non-bank financial institution, and you must back your stablecoin one-to-one with either cash or US treasuries, and ideally they're custodied at an FDIC insured institution. The quiet part out loud about all of this is that is essentially giving you a framework to do fintech in a way that fintech never had. If I'm a fintech today, I want to get oversight. I want to become a bank. I couldn't get a charter. It was very hard to get a charter. I couldn't get FedMaster accounts. I couldn't get access to the payment systems, but I can become this other thing, this payment stablecoin issuer. As a bank, I've now got this specific license I can use at the federal level. Like it really does create a massive amount of clarity for this new area. What are your thoughts about the Genius Act, Ben?
As I said, it opens a lot of doors. I think banks are acting quick because they're hearing and sensing the competition, right? For like 40, 50 years, or I don't know, like a century, they had access to this payment rails. They had access to certain like exclusive things that other fintechs companies couldn't get access to. Now there is like the playing field is kind of leveled right now. So whomever can act faster and can be more genius can get there faster and dominate the market. So I think competition overall is good for the market, is good for the consumer. Again, this is one other competition landscape that I'm watching closely and enjoying to see like how it emerges. Overall, I think it's good for the crypto industry because it leads to more adoption on the financial institutions on the stablecoin side, because they already have the distribution, they already have users owning those bank accounts. It's easier for them to enable use cases that would be harder for a newborn fintech to do that. But at the same time, it opens doors for large corporations, as you mentioned, like companies like Stripe, like PayPal and others, that they were like semi-bank, or like companies like even like Coinbase or Binance, that they didn't have that banking charter, but now they can kind of get that other things and then compete with banks.
Yeah, I think it's going to be fascinating to watch. And there's another thing. I saw the statistic that today the news broke that Tether is now the seventh largest holder of U.S. Treasuries.
Yeah.
And if you are looking for a lot of people to refinance short-term treasuries as a nation, because I don't know, perhaps that's something you'd be interested in, having a bunch of new buyers of those treasuries to get into a new area would be particularly helpful. So I can see why this matters from a policy standpoint.
Yeah, I think one of the fascinating things for banks, particularly banks in the US, is this recognition that as they learn more about stablecoins and the use cases, the primary use case is either for consumers and businesses outside the U.S. Like that's where a lot of the demand to hold stablecoins comes from, and yeah, I think you've seen some banks and people talk about, oh well, is there a concern about deposit flight of consumers are going to move out of their traditional bank account in the U.S. And then they're going to move into a stablecoin, and we've seen in the Genius Act, there's parts around prohibiting passing interest back directly to the end holder. From my own like personal opinion, I don't think that there's that much of an incentive in interest for most consumers and businesses in the U.S., even if stablecoins are a kind of regulated payment method, to just move their money out of deposits and hold stablecoins. I don't think that really solves that much of a problem. I think most of the demand is going to continue to be consumers and businesses outside the U.S. that didn't really have access to dollars before, that couldn't ordinarily open up a dollar bank account, that's now going to have this alternative that gives them a dollar wallet, which will be a really attractive product for them. And so I think there's going to be this like store of value outside the U.S., which we're seeing today. And then I think that there's stablecoins as a payment rail, to move money in and out of a bank, deposit or withdrawal or send money, cross border. So it'll be really interesting to see how U.S. banks approach the space, given that the vast majority of U.S. banks only serve U.S. customers. And so if you only serve U.S. customers, then yes, like there are cross-border payment opportunities, but it doesn't really make sense for a bank to offer a stablecoin custody to a U.S. consumer. Like that doesn't really bring anything new. And so will you see U.S. banks that don't serve customers outside the United States today look at this as like, maybe I could expand globally in a way I haven't been able to, and if I have a stablecoin, then I can have a product that I can, be able to benefit and earn upside in these consumers that are getting access to dollars outside. And then how do you manage the risk of that? So it's a really fascinating, market that I think is there's a big opportunity for banks if they really look at how they can leverage their unique strengths. And maybe that ends up just being holding the reserves for stablecoin issuers. And Nick on our last show is like, there are 8 ways that you can make money just banking a stablecoin issuer. So maybe that ends up being one of the primary approaches that banks in the U.S. take.
My hot take is that there will be domestic use cases very quickly after this bill drops. And that's just coming from having spoken to enough banks that are moving into it. And 1 or 2 of them passed my smell test. Good chunk of them were like, oh yeah, this is a bank trying to do innovation, lol. But there were some that was like, okay, yeah, you have that distribution, you have that unique capability, I can see the demand. Actually, that would really make sense on a purely domestic use case basis. So I think that's coming, Cuy. I really, really do. And regulatory clarity is always helpful to kind of unlock this. And speaking of, the last story is BBVA, who we've had on the show before, are now going to offer cryptocurrency services in Spain. So they'll offer crypto trading and custody to their Spanish retail clients. They're expanding after testing in Switzerland. They're initially going to support Bitcoin and Ethereum, and they plan to add more currencies and stablecoins in the future, which makes BBVA one of the first major European banks to directly offer crypto services to its retail customers. This story didn't get a lot of pickup, but to me, this is like the biggest news ever, because it's like big old incumbent bank that's hundreds of years old directly offering crypto to its retail customers. Bam, did that stand out to you at all, or am I just like way too in the weeds here?
It did, because we just hired a former BBVA employee, so which is just joined our team, so I know a lot about BBVA and their exposure. They work like, if you think about it, it kind of makes sense because like if you're a U.S. bank, your target audience are U.S. dollar holders. BBVA is not just a Spanish bank. They have branches in emerging markets like Turkey, in LATAM, a lot of these Spanish-speaking countries, and they move a lot of money internationally. And they're tired of like paying these FX fees and managing all the volatility related to FX market. So stablecoin makes total sense for them. It's just big chunk of their business is global and international, and they just rely on that stablecoin to basically make it cheaper, easier, faster, and better for them. So I'm not surprised, considering that that's their business model, and they were like, Spain is a small region for them. So as a result, even though they're like originally a Spanish bank, but they are kind of spread it out across the globe. So they need to use an alternative method. And what could be better than a stablecoin to make that problem to go away for them?
Heck yeah. Cuy, your thoughts on the
Yeah.
direct to retail and where Mika plays?
Yeah, I was gonna say, just shout out to BBVA, and we've worked closely with them over the past year. We've recorded an episode with their head of digital assets. I think some point in the fall. So go back and check that out. And I think they have had a long-term vision of the role that they could play in the space, across both stable coins and crypto. And I think it helps being in Europe. It helps with Mika, and the framework there is more clear, and has been clearer for longer than in some other markets. But really, it's kind of credit and testament to their team is that I think what we're going to start to see is there's going to be this very clear separation between banks who have continued to invest in learning and planning and executing and kind of having an approach towards crypto assets and stablecoins for the last 5 years, throughout cycles. That they've had a team, they've had consistency, they've been able to make progress over time, and then there are going to be banks that have kind of gone with the cycles where they might have had a team in 2021 and then they didn't have anybody working on it in 2022, 2023, and then then they started staffing up a team in 2025, and I think for any large institution to be able to execute in a space as dynamic as crypto and stablecoins, it's very hard to go 0 to 1 within one cycle and in a matter of months. Like, that initial education that has to happen internally across all layers of the bank or the institution takes years to do. And so, being able to have a multi-cycle view, and then I think it also speaks to like, who's still going to be around here the next cycle. And like, we'll get regulatory clarity and there'll be excitement and growth. And then, there'll be another phase where, something doesn't work out. And then I think we're going to continue to see a separation between long-term mindsets, long-term approaches, building with consistent leadership inside large institutions with a long-term vision versus banks that have kind of come and gone, with the cycles, deprioritize, prioritize. And I think it's going to be very hard, for the latter to be able to compete. And I think BBVA is a great example of someone who's been in the space for a long time and taken that steady approach. And now, like, they're launching products, and being one of the first banks of their size to get in the space is a huge opportunity for them.
Yeah, Bam, any other thoughts on this one?
No, I think the fact that a big bank is moving that space and they're not looking at crypto as just a niche, or as you mentioned, like just trying to be innovative. It's just solving the real world problem. That's very, very interesting. And like, let's not forget that stablecoin is like almost like 6 or 7 years old, already making move in the global ecosystem. It's younger than crypto itself. It's moving faster than Bitcoin itself. So it's super interesting and fascinating to watch.
Yeah, it's crazy that consistency and staying over the cycle is kind of the lesson that we keep on learning. You had it with stablecoins when everybody thought you were crazy, and now an $82 million Series B later, they don't think you're crazy anymore. And shout out to the people who do still work in a bank that have been fighting this fight for a long time, doing that education, because that's a hard thing to do. I know I did it for a while and got very bored very quickly of doing that and left to go be like the media guy, because it's way more fun. And this was a fun show. So thank you very much for listening or watching if you are checking us out on YouTube or on X. Bam, where can people find out more about you and what you do over at Mesh?
Yeah, thank you for having me. I really enjoyed the conversation with you and Kai. Would love to come back and discuss more news with you guys. You can check meshconnect.com. We are hiring globally. So if you're building and you want to build on Web3 and crypto and a stablecoin juncture, DM me on LinkedIn, or you can find me on Twitter or x.com. I would love to chat with you. And one message for all the fellow founders: don't let funding kill you. Don't think about like every single company has raised like hundreds of millions of dollars and you cannot do that without funding. Let's just have the courage to continue building. There is no better time for building in Web3 and a stablecoin. So if you're interested to put a dent in the universe, in the finance ecosystem, this is time to build. So I encourage all the founders to start working and building in this ecosystem, because together we can make a big change.
I love that call to arms. Kai, follow that. Where can people find out more about you?
Yeah, I agree. Visa.com/crypto, on X at Cuy Sheffield, and yeah, really excited about the opportunities in the space. Appreciate Bam you coming on. Congrats on the raise.
Thank you. I appreciate it.
You'll find me at sardine.ai for all things fraud and compliance related if you want to deal with scams. fintechbrainfood.com if you want my rants about the future of fintech and where stablecoins fits within it. And you'll also find me on LinkedIn or on X at SYTaylor. And if you haven't already, go ahead and hit the subscribe button. If you're watching, drop that like on there, hit subscribe. It makes such a difference to us. Honestly, you've been helping the show grow. The numbers are looking good, but we can do better. I believe in you guys. Until next time, bye for now.